What's up, my people, and welcome to the channel. My name is Diamond. Have you ever been excited about your paycheck? Like you've been putting in hours, you've calculated exactly how much your check is going to be, and you wait for that direct deposit to hit only to look down and think, they must have mixed me up with somebody else. This can't be right. Well, if that's been you, you're in the right place, because I know I've been there. And in this video, I want to jump on the computer and show you a pay stub. I want to walk you through part by part of what's included on the pay stub, what to look out for to ensure that you have been paid what you are owed. And also, we're going to talk about all the different people who's taking money out your paycheck before you even get it and without your permission. So if you want to learn more about that, you're in the right place. And this is important because according to a recent study, more than 50% of workers in the U.S. have experienced some type of payroll issue, meaning they were overpaid or underpaid, and neither one of these is a good situation for you. And nowadays, where you don't receive an actual paycheck, you don't receive a pay stub every time you get your paycheck is just direct deposited right into your account. Or if you don't have a bank account, they sign you up for one of those prepaid debit cards, and then once you get paid, they just load it onto that card. See, now you don't actually have your pay stub, so unless you go out and seek that pay stub, you're not actually looking at it. Comment down below and let me know, when is the last time you looked at your pay stub and verified that everything in there is correct? For a lot of people I know, and even back when I was working an hourly job, I did not look at my pay stub every week. And that could be a costly mistake, costing you hundreds, if not thousands of dollars. So let's jump on the computer and take a look at a pay stub. So here we have a pay stub, and the top half is pretty self-explanatory. It's all your personal information as well as the company you work for, but the pay stub is broke down into three main sections. The first section here is your pay. The next section is your taxes, and lastly you have your deductions. So when you're looking at your pay, this is going to be the first area you want to look in and focus in on. You want to know what your hourly rate is, which of course you already know what that is. And then the quantity is how many hours did you work during that pay period. So if you get paid every week, that's going to be the hours you worked in a week, or if it's every 2 weeks, or however often you get paid, you want to make sure that this number here matches the number of hours that you've actually logged in the system and worked. When you multiply the hours you worked by your hourly rate, that's going to give you your current pay. That's your gross pay, meaning your top line for that particular pay period. You also have other types of pays in there as well. So if you worked any overtime, you will see your pay rate for your overtime work and how many hours you work there, and that'll be added in. In this particular situation, I was receiving commission. So here you see a commission pay rate here of $3 and a quantity of 13 sold. Therefore, when you multiply that, you get a total of $39. So you want to multiply your quantity of hours times your pay rate. That's going to give you how much you're due or how much is owed to you. You add all of that up, and here you have your gross pay. You have it for that particular pay period. You also have it for year to date. Now, with the modern systems where you log in online, how many of you actually track outside of your payroll system how many hours you're working? And if you're not doing that, this is why it's important, because this is all computer generated, right? You log into the computer and you log out. You punch in for lunch, punch out, and you're expecting the computer to calculate everything for you. Well, it's important for you to keep track of how many hours you worked, because if the computer system went down or didn't log one of your entries, well, your quantity of hours, the number of hours you worked and what you're getting paid for may very well be off. And if you don't know how many hours you worked because you wasn't tracking it, then you will never know, even if you look at your pay stub, whether or not you are getting paid for all the hours you work. So you want to track how many hours you work outside of the computer system, and then reconcile that with your pay stub to make sure that what's on your pay stub is there. Now, this is your gross. So this check here was, gross pay was $420.50. Now, when you look at the second section, this is the section no one likes, and this is the taxes. These are the folks who's taking money out your check before you get it deposited into your account. They don't ask for permission. It's just done. So you're going to see several different types of taxes. And depending on where you live, you can see more or less taxes than you see even on this stub. So here you have FIT. And the naming conventions can be different depending on what state you live in, what company you work for. They can abbreviate it in different ways. But FIT is federal income tax, and that's something that we all have to pay. So you see here my FIT, federal income tax, is $38.84 for this particular pay period. And keep in mind, all these taxes are going to be deducted from your gross pay, deducted from this 420. Under your federal income tax, you're going to have two other types of taxes. You have to pay your Medicare taxes, and you have to pay Social Security. This is where you're paying for your parents to be taken care of right now. Now, it's supposed to be so you can have a little bit of retirement funds available to you when you get old. But if you look at the most recent report, it looks like Social Security looks like they're gonna not be able to meet their full obligations as early as the year 2033. But that's a discussion for a different video. Nonetheless, both you and your employer is actually paying into this Social Security fund, and you can see the deductions here. So you got your federal income taxes, you got your Medicaid, you got your Social Security being taken out, and then underneath that, this is SIT, which is state income taxes. Now, if you live in a state that don't require state income tax, then of course you won't have this here. But this here, you can see this $15.81. And so the total taxes taken out of this check was $86.82. That is then deducted from the $420. But we're not done yet, because again, depending on where you live, you can not only have state income taxes, but you can have city income taxes, you can have county taxes, you can have other types of taxes that can come out of this as well. But this is the most basic setup that you're going to see, and this is the most common setup you're going to see. Federal income taxes, Medicaid, and Social Security taxes being taken out, as well as state income taxes. Now, the third part of your pay stub is going to be where your deductions are going to come out. So we have your gross pay up here, we have your taxes taken out, and now we have the deductions. And the deductions can be anything that you have authorized your employer to take out of your pay. So you can have health insurance, dental, vision, you can have flexible spending accounts, you could have your life insurance through your employer that's being taken out. You also could have short-term disability or long-term disability, as well as any other thing that you've authorized your employer to be taken out. And all of those will be added up here and again deducted from the 420. And this is the amount that's direct deposited into your account or loaded onto your prepaid debit card. So as you can see, this is the amount that you see and that you can actually spend. So when you're calculating how much money you're going to make and you're multiplying your hours by how your hourly rate, and you coming up saying, oh, this check should be 420 or whatever your number may be, this is why the number that you get don't match what you originally calculated, because you have all these mandatory things that is coming out of this check. And as you can see, there's nothing extra being taken out. So if I had health insurance through this company or dental or vision or any of those things, that's even more money that's going to be taken out of this account, making this amount even smaller. But this is an old pay stuff from way back in the day when I was making just a hair over minimum wage. And the last thing I want to bring your attention to is the tax withholdings. When you see the amount that's taken out here, that's actually set up when you fill out your W-4. So over here, you can see my tax setup is for my federal income tax and state income tax. It's showing that my filing status is single and the exemptions is 1. Now, a lot of people incorrectly assume that the number of exemptions have to match your dependents. The truth is, the exemptions is just the number that's used to calculate how much federal taxes they should be holding or how much state taxes they should be withholding. So if you're the type of person who receives a large refund every single year, I'm talking thousands and thousands of dollars, meanwhile throughout the year you could have used that money. Well, one way to get that money back earlier instead of waiting on your refund is to adjust your W-4 so you can adjust your withholdings so that they're not over withholding, and that means this number here would be larger. Or if you are having to pay a lot of money each year and you don't want to pay taxes, that's also something you could do here and go and adjust your W-4 so that they are taking out more money for federal taxes, more money for state taxes. And that means that you will have less money in your net pay, but at the end of the year, you won't be hit with a large tax bill. Remember, a tax refund is not a gift. It's not them looking out for you. What that is you overpaid and they're giving you a refund of the money that they've been pulling out your check every single week. So I'm not a tax professional. I always tell people to get professional tax advice, but that is a tip to help you out. And I hope this gives you a better understanding of how to read your pay stubs. Now that you have a clear understanding of how pay stubs work, I challenge you to go back and verify the last 6 months worth of pay stubs and verify that they are accurate. People always are talking about making more money. I mean, who wouldn't want a few extra dollars in their pocket? Well, this could be an easy way to put money back in your pocket. If you don't know how to get your pay stub, I want you to reach out to your manager, talk to your HR department, and find out what the appropriate procedure is for your company. But pull those pay stubs down and verify them, because this is your money. This is money that is due to you. If you like this video and you want more information on how to manage your money, how to get out of debt, and how to invest properly and safely, then you're in the right place. I want you to click the subscribe button and turn on your notifications so that you know when the next video is dropping. Until next time, my name is Diamond. Peace.